Welcome to another episode of A10X brought to you by 10 Leaves.
Glad to be here for this one.
Yeah, so in the time it takes you, listening right now, to hear the end of this sentence, an autonomous algorithm operating in a server farm somewhere has already parsed the global news cycle,
Oh, easily.
adjusted a multi-million-dollar portfolio, and executed literally 1,000 individual trades. So welcome to the deep dive.
It really puts our biological clocks to shame, doesn't it?
It absolutely does. We are looking into the incredibly high-stakes, hyper-modern world of finance today. A world where artificial intelligence is making decisions at speeds that fundamentally break our biological understanding of time.
Yeah, and we're talking about a complete transformation of the financial landscape.
Exactly. And we're looking at the two distinct sides of this new coin based on our sources. On one side, we have the AI systems that are actively executing trades.
Right, the autonomous traders.
Yep. And on the flip side, we have the AI systems that are acting as the automated police force, the ones monitoring those very same trades.
It is a profound structural shift for the entire global economy. Because if you step back and look at the foundation of it, finance has always been about numbers.
Sure.
It has always been about gathering vast amounts of data, crunching that data, and trying to make an accurate prediction about the future. That's Finance 101.
Buy low, sell high, based on what you know.
Exactly. But what we are exploring today is a monumental shift in who, or, well, more accurately, what is actually doing that crunching.
Yeah, we're definitely not talking about guys in suspenders yelling on trading floors anymore.
Not at all. We have moved out of an era defined by human intuition and manual calculation and have entered a fully automated ecosystem.
Okay, let's unpack this, because the sources we are looking at refer to these new systems as autonomous traders.
Right.
And their defining characteristic is that they are executing trades in real time. They are pulling in market signals, they are processing breaking news, they are running predictive models, and they are doing it so efficiently that they are actively outperforming human traders.
Outperforming them by a massive margin.
Right. But I think the term real time gets thrown around so much in tech that it completely loses its impact. I mean, we hear real time and we just think, oh, it's fast.
Right, it means a lot more than just fast here.
Exactly. I want you, listening right now, to really visualize what this actually means. Compare an autonomous trader to a human trying to compete on the exact same level.
This should be good.
Imagine someone challenges you to a trading competition. But before you are allowed to place a single bet, you have to read every single financial newspaper published on Earth today.
Every single one.
Yeah, and you have to check the weather reports in every major agricultural hub to predict crop yields.
Right, to see if coffee prices are going to spike because of a frost in Brazil.
Exactly. You have to monitor the global grapevine, every whisper, every rumor, every minor supply chain disruption across the entire globe.
It's just an unfathomable amount of text.
Right. And then you have to comprehend all of that intersecting data, figure out what it means for the price of a specific tech stock or a commodity, and then execute your trade.
Good luck with that.
Right. And here is the kicker. You have to do all of that flawlessly in a single millisecond.
Yeah.
That is what an autonomous trader is doing. It is an utterly impossible scenario for a human mind to replicate.
What's fascinating here is the sheer underlying mechanics of how these predictive models operate when they are combined with live news and market signals.
Because it's not just magic, right? It's hardware and math.
Precisely. When the sources note that these systems outperform human traders, it is crucial to understand that it isn't necessarily because the AI possesses some kind of deep philosophical wisdom about the nature of the global economy.
Right. It doesn't intuitively understand economics better than Warren Buffett.
No, not at all. It is fundamentally a game of latency. The modern financial market is a game of real-time execution that relies on computational architecture.
Latency meaning just the sheer physical time it takes for data to move.
Exactly. We are talking about algorithms housed in servers that are physically co-located as close to the exchange's matching engines as possible.
Wait, co-located? Like they rent space in the same building as the stock exchange's computers?
Oh yeah, they pay a premium for it. Just to shave fractions of a microsecond off the time it takes data to travel through a fiber optic cable.
So at this level, physical distance actually equals time. If your server is a mile down the road, you lose the trade to the bot that is sitting right next door.
Exactly the point. Let's look at the mechanics of what happens when a piece of financial news drops. Say, a central bank announces a surprise change in interest rates.
Okay, a huge market-moving event.
Right. When that press release hits the wire, An autonomous AI trader doesn't read the news the way you or I do.
It's not scrolling through a news app.
No. The system immediately ingests the raw data stream via an API. Its predictive models instantly parse the unstructured text, extracting the core data points.
Just ripping the numbers right out of the text.
Yes, and assigning a sentiment score to the language used by the central bank. It identifies the market signals and runs those signals through vast predictive algorithms trained on decades of historical data.
So it's checking history to determine the statistical probability of how the market will react today.
Exactly. Then it decides on the mathematically optimal trading strategy and executes the buy or sell orders.
And it does all of this before a human trader has even had time to refresh their web browser.
It does all of this in fractions of a millisecond. It happens in a time frame so small that human biology simply cannot perceive it.
It's mind-boggling.
By the time a human trader has consciously realized what the headline says, the AI has already bought, sold, adjusted its position, and moved on to the next data point.
Wow.
That is the reality of executing trades in real time using market signals and news. The machine wins because the machine is operating purely on optimized computational logic.
Completely unbound by the biological latency of reading, thinking, and physically clicking a mouse.
Exactly. We are the bottleneck.
Which is an incredible technological achievement. But as I'm looking through our notes here and just marveling at the sheer velocity of these autonomous trades, a very logical question pops up.
I think I know where you're going with this.
Right. If we have AI making massive market-moving financial decisions in a fraction of a millisecond, how on earth could a human regulator or a compliance officer possibly keep up?
They can't. Not even close.
Right. If I am a compliance officer at a major financial institution and my entire job is to ensure that trades are legal, safe, and not manipulating the market, I cannot monitor an environment that operates at the speed of light.
You'd be looking at a blur.
Exactly. Which brings us to the second half of our deep dive. RegTech. Regulatory technology.
It is the inevitable and necessary evolution of the ecosystem.
Yeah, because we had to do something.
If you upgrade the speed and complexity of the traffic, you have no choice but to completely overhaul the speed and complexity of the traffic cops.
Oh, that's a great way to put it. The old methods of policing finance simply break down at these velocities.
Completely shatter.
Here's where it gets really interesting, because there is a profound irony in all of this for you, listening, to consider. We have essentially engineered financial machines that are so incredibly fast and so complex that we're completely incapable of watching them ourselves.
We locked ourselves out of the loop.
Yeah, we literally had to build a second set of machines just to police the first set of machines.
That's into the future.
Right. The sources detail how AI is now used to help financial institutions stay compliant by automating fraud detection, monitoring transactions, and flagging risks instantly.
Yes.
But I want to push back on this a little bit.
Okay, go ahead.
I am struggling to buy this perfect shield idea. If the autonomous trading AI and the RegTech AI are built on the same fundamental computational architecture, aren't we just creating an infinite loop of bots trying to outsmart each other?
That is a very valid concern.
Like, how does the compliance bot actually freeze a trade if the trading bot is designed to be as fast and evasive as possible? Does it really level the playing field?
It levels the playing field by shifting the entire paradigm of how compliance operates.
Okay, how so?
To understand the mechanism, you have to look at what financial compliance used to be. Historically, monitoring transactions and detecting fraud was a deeply retrospective process.
Like an autopsy.
Exactly. It was a post-mortem. A team of human compliance officers would sit in a room looking at spreadsheets and logs of transactions from yesterday, or last week, or even last month.
So they were basically looking in the rear view mirror.
Right. They were looking at the past, trying to spot a fraudulent pattern, a case of insider trading, or a highly risky leveraged position long after the fact.
Which is effectively useless if the algorithmic trade has already happened, the money's already gone, or the market has already experienced a flash crash.
Yeah, the damage is done.
You're just figuring out why the building burned down rather than putting out the fire.
Precisely the problem. And that is the problem RegTech solves. It moves compliance from being a slow, retrospective audit into an instant, proactive shield.
Proactive, meaning it stops it before it happens.
Exactly. The RegTech AI is monitoring the transactions as they happen in real time. It takes the exact same massive computational power used for predictive trading and points it toward anomaly detection.
So it's using the weapon against itself, essentially.
Yes, it is analyzing millions of data points across the global network simultaneously. For example, it might be using natural language processing to detect an orchestrated panic on social media,
Okay.
while simultaneously cross-referencing that sentiment with irregular volume spikes originating from unverified trading accounts.
Wow. So it isn't just looking at a single trade in isolation. It is looking at the entire structural shape of the market in that exact millisecond.
Yes, it is constantly mapping the network for risks. If an autonomous trader executes a sequence of orders that matches the signature of market manipulation.
Like spoofing, right, where algorithms place massive fake orders to artificially drive up a price before canceling them.
Exactly like spoofing. The RegTech system recognizes that pattern instantly. It doesn't wait for a human to flag it on a report next Tuesday.
It sees it the moment it starts.
Right. It flags the risk the moment the pattern emerges, and it can automatically freeze the transaction or sever the API connection in the very same millisecond it was initiated.
Incredible.
It is the only physical way to police an environment where the actors operate faster than human thought.
Okay, so you fight algorithms with algorithms. It paints this picture of a perfectly closed, perfectly automated loop.
It does seem that way.
Yeah, you have the AI autonomous traders zooming around, parsing news, and making incredibly fast decisions based on predictive models. And hovering right above them, you have the AI RegTech systems instantly analyzing the network, flagging risks, and keeping everything strictly compliant.
A digital
It
ecosystem.
sounds flawless. It sounds like we've built an impenetrable financial ecosystem where everything is faster, smarter, and safer than ever before. But looking at the final section of our sources, what happens when this perfectly closed loop encounters something it has never seen before?
Yes. The real world.
Right. What happens when the real world intrudes on the math? Because this leads us right into the philosophical gap you, as a listener, really need to think about.
The non-negotiable need for the human element.
Exactly, the human safety net. Because the sources explicitly warn us about the distinct risk of over-reliance on AI.
Yes, they do.
They stress the inherent unpredictability of markets, and they state very clearly that despite all this incredible technology, human oversight remains critical.
Absolutely critical.
So what does this all mean? Let me push back here again. Because if the machine can instantly parse millions of market signals across the globe, and a human compliance officer can only look at one screen at a time,
Right.
why is there a risk of over-reliance? Why shouldn't we just trust the machine completely? Markets are constantly driven by human irrationality. They are driven by panic, greed, and completely unforeseen global events.
Humans are messy.
Exactly. Can an autonomous trader's predictive model truly be trusted to handle pure chaos better than a panicking human?
This raises an important question. And it is arguably the most critical insight we can take away from this entire deep dive.
I agree.
To understand the sobering reality of the risk of over-reliance, you have to look at the fundamental mechanical limitation of any AI model, regardless of how advanced its computational architecture is.
Okay, what is that limitation?
Finance is undeniably faster, smarter, and more automated than ever. But a predictive model is exactly that. It is a mathematical model, and models only know what they have been trained on.
Right. They are trained on vast oceans of historical data, so they have perfect knowledge of the past.
Yes, but perfect knowledge of the past does not equal perfect comprehension of the present.
Oh, that's a great point.
These systems are exceptionally good at finding patterns in data that they have seen before. If the market behaves in a way that is historically consistent, the AI will perform flawlessly.
It will execute its trades, and the RegTech will monitor those trades with perfect efficiency. Exactly. But financial markets are not closed systems governed by absolute, unchanging laws of physics. They are inherently unpredictable because they are tethered to the messy reality of human events.
Right. They are tied to sudden geopolitical conflicts, unpredicted natural disasters, overnight shifts in global trade policy, or global pandemics.
Exactly.
They are tethered to black swan events, things that have literally never happened before in the history of the world.
Yes.
And if it's never happened before, there is zero historical data for the AI to have trained on.
That is the ultimate vulnerability. When an autonomous trader encounters a completely unprecedented event, something that breaks the historical pattern entirely, its predictive models can fail.
Because the math no longer applies.
Right. And because the system operates at a fraction of a millisecond, it can fail spectacularly before anyone realizes what is happening.
Wow.
It's like training an advanced self-driving car purely on data gathered during sunny summer weather, and then suddenly dropping it into the middle of a massive blizzard. Oh, I love that analogy, because the car's cameras and sensors aren't broken.
Right. The hardware is fine.
But its contextual map of the world is completely useless. It doesn't know how to interpret the snow because it has no historical precedent for it.
Exactly. And in the financial world, that blizzard could be a sudden political collapse somewhere. The AI doesn't understand the nuance of the event.
It just sees weird numbers.
Yeah, it might misinterpret a massive, legitimate global panic as a quote-unquote buying opportunity because of a flaw in its historical weighting.
Right.
Or, conversely, it might initiate a cascading algorithmic sell-off that crashes the entire market based on a misunderstood news parsing.
And that is exactly why human oversight isn't just some regulatory box to check off. It is not a formality.
It is a necessity.
The human mind might be infinitely slower than the machine when it comes to raw data processing, but the human mind possesses something the machine currently does not: contextual understanding and common sense.
Common sense is huge here.
Yeah. A human can look at an entirely novel, unpredictable global crisis and intuitively grasp its implications, even if they have never lived through it before.
Right. We understand human fear, we understand irrational panic, and we understand the nuanced, unquantifiable reality of the world in a way that a purely mathematical model simply cannot.
So when the predictive models fail to predict a reality they have never seen, human oversight is the ultimate critical safety net.
It really is.
So synthesizing everything we've looked at today, we find ourselves in an incredibly paradoxical situation. To sum it all up for you listening, we have completely transformed the architecture of global finance.
It's a fundamentally different world.
It is a faster, smarter arena. We have deployed these autonomous traders that can ingest live news APIs, calculate sentiment, and execute predictive trades in milliseconds, outperforming human capabilities through sheer computational speed.
Yep.
And to keep them in check, we've built incredible RegTech systems that constantly map the network, flagging fraud and anomalies instantly to maintain compliance.
The perfect automated cops.
Right. We have fully embraced the automation. But at the very core of this lightning-fast, high-tech machine, the entire system still desperately needs human eyes to navigate true, chaotic unpredictability.
It does. But I want to leave you with a final provocative thought to mull over. A thread to pull on long after this deep dive ends.
Okay, lay it on us.
We've established the logic that human oversight is strictly required because markets are inherently unpredictable.
Right, the safety net.
But we've also established that these AI systems, both the autonomous traders and the automated RegTech cops, operate in fractions of a millisecond.
Yeah.
They make decisions at speeds human biology cannot physically perceive. So here is the paradox of modern finance.
Okay.
If the system's ultimate safety net is a human being, but the machine is moving infinitely too fast for that human to see what is happening in real time, how exactly do we humans maintain meaningful control over a system operating at the speed of light? Are we truly governing the machine? Or is the ultimate failure point of the global economy just the biological reaction time of the human holding the kill switch?
That is a heavy, heavy question to sit with. How do you meaningfully govern something that operates faster than your own visual cortex can even process the data on the screen?
You really have to wonder.
It really makes you rethink the illusion of control in everything we've talked about today. But as fascinating and frankly slightly terrifying as the underlying technology is, it all eventually comes back to the root cause of the unpredictability.
Us, humans.
The humans building the models, the humans monitoring the screens, and the deeply human behavior that drives the chaos of the markets in the first place. Which is a perfect segue, because next time, AI meets human psychology.
That's going to be a good one.
Oh, definitely. We are going to explore what happens when algorithms try to decode our minds. You won't want to miss that one. Thanks for listening to another episode of AHEN X, brought to you by 10 Leaves.